Hello YouTube! Thank you very much for clicking. So my name is Hippo and I want to talk to you today about the state of the market. Okay, so we've had Janet Yellen come out, the Treasury Secretary, come out and talk about the fact that there might need to be an interest rate rise because of the economy overheating, right, from the trillions being spent in stimulus spending. And this obviously sent shockwaves through the stock market. There was a sell-off. The next day, Janet Yellen walking back her comments saying, actually, there is no inflation problem. You can go back to your stonks. And so, you know, this is, okay, fine. So she kind of withdrew her comments, but this is not something new. Okay, this is something that's been going around for a while, and that's inflation. Okay, and inflation, there's many ways to understand whether inflation is happening or not. There's many indicators, some of which is by looking at the price of everyday goods and services. For example, in real estate, you look at the price of lumber. Yeah, it's at an all-time high. It's usually in the range of 200, 370, 400, almost 600 here, back to 400, 300, and now it's 1400. That's crazy, okay? You can look at the price of, for example, here we go, margin debt. Look at the price, like margin debt change year on year. So margin debt essentially is when you're borrowing money to invest it. So for example, here on at the bottom, you'll see here that the actual percentage change, when it goes up above 50%, above that line here, it peaks and it crashes. That's a bubble forming and it crashes. So here the dot-com bubble, here the S&P 500, you see it crash. Again, 2007, 2008, subprime mortgage crisis, crash. And then the next time they went above that 50% line is this year, is in 2021. And this is really what happens when, you know, in 2020, we had a year when everything was going up. Okay, this was a year where there was a lot of irrationality in the market. So this is something that we saw any company, high-tech, high-growth company with no revenue, no cash flow, relying on 2026 projections on a 60x multiple would have gone up and you would have made more than your money. And that's fine because people kept buying and prices kept going up. And people kept buying because prices kept going up and vice versa. But there was a problem in that at one point, when valuations are so high, prices are so high, and people are buying and buying, but at one point someone wants to sell, well, no one's going to be buying what you're selling because everything is so high, and especially not fundamental investors that look at the company on a micro perspective and look fundamentally at the performance and whether it's worth the valuation. And so when you're borrowing money and you keep on borrowing money and that debt is fueling your, you know, the market up and there's no one buying it back, that there's going to be a gap, okay? And that's when there's a crash. And this is another indicator of looking at whether there's inflation or not. And so overall, inflation is very real. It's happening. And we have the world's most famous stock picker, Warren Buffett, come out and say in his AGM last week with Charlie Munger, there is very substantial inflation. We are raising prices, people are raising prices to us, and it is being accepted. That is the definition of inflation, okay? So this is where we have to take a page out of Warren Buffett's book. I want to talk about his investment philosophy throughout the years and how he's survived, right, and grew through inflation so many times. He grew through crashes so many times, countless presidents, wars, trade tariffs, whatever you can think of, and he's made a killing. And you know, that's because he invests in great businesses. So businesses that on the long term will be here because they're so fundamentally strong that they will be here 10 years from now, 20 years from now. The financials are great. Quarter over quarter, subscriptions are growing, market share is expanding. You know, you've had an amazing management team and board. You've got you know, the product being the best on the market, etc. And these are companies that, you know, are not just riding on a trend or an industry growth, right? They're riding on their own value and the fact that they're going to be here 10 years from now because what they provide is going to be here 10 years from now. And this is what I really want to share with you guys as a retail investor, and as with you guys as well. This is something that we need to think of because 2021 is not going to be like 2020. This was an outlier. That year was an exceptional year, statistically speaking. So, and Warren Buffett kind of gives a very good example looking back at history. He looks at market caps in 1989. I'm going to share that with you right now, and market caps in 2021. And he sees that, you can see that here. In 89, there's 6 companies in the US: Exxon, GE, IBM, AT&T, Philip Morris, Merck, and the rest are from Japan. And in 2021, completely new list. None of the companies, not even the Japanese ones, not even the American ones, none of them are here, okay? Tides change, okay? Industries change, and regardless of what happens, you need to find a company that is going to be here 30 years from now, and that's exactly what Warren Buffett did, like Exxon, GE, Philip Morris, Merck. These are companies that, had you invested in them back then, you would have been extremely wealthy. And that's what Warren Buffett did. He just bought and held and bought and held, and it's worked through crashes, through recessions, through whatever. And this is a mindset that we need to have as retail investors. There's a lot of trends happening, and on YouTube it's very easy to get, go down the rabbit hole with this information overload about SPACs, about genomics, about EVs, about whatever. And I'm all for these trends. I love, these kinds of trends. I'm a big fan of disruptive innovation, and everything that's behind what ARK is doing. The trends there are valid, okay? But you have to look beyond the trend. You have to look at the company itself, and is it going to be here 20 years from now? Warren Buffett actually shared the automotive industry as example. In the 1900s, Henry Ford, came up with the Model T, and that was one of the most impactful technologies in the world. And when that came out, people in the streets were like, okay, wow, that's the future. I want some of that. And 2,000 automotive companies popped up in the 1900s. 2,000, that's insane in the US. That's a trend. That is the definition of a trend. But it's a very valid trend because cars, right? Except in 2009, that number dropped from 2,000 to 3, right? You got GM, Ford, and Chrysler. And 2 of those went bankrupt. I think Chrysler merged with Fiat, which is based out of Europe. So really to tell you that a trend is one thing, and it's a good story narrative, and it's valid most of the time, but you need to look at the company, and is it going to be here in the future, in the long term for you? Another person I want to talk about is Peter Lynch, the Wizard of Wall Street. Okay, he's very well known for picking, same thing as Warren Buffett, great businesses, but in a different way. He picks companies that the average consumer knows and understands really well and keeps buying. He soaks himself from his environment, from his day-to-day, what brands people are buying, what names are being dropped all the time, and he bases his investment philosophy based on the average consumer. And this has worked for him. Dunkin' Donuts, not a sexy company, but it's a hell of a donut company. It's the best donut company there is. And it's something that works. They do one product, and they do a damn good job at it. It's a reference, it's in The Simpsons. That's when the company's made it. It's in The Simpsons. And companies like Dunkin' Donuts and Heinz, for example, the ketchup. Again, boring companies, but fundamentally amazing. These companies, his portfolio returned 2,400% in a decade. In that same decade, the S&P 500 returned 500%. So to give you an example of that, the fact that he had such high conviction in these companies that they're going to be here 10 years from now, fundamentally, that he followed through with his tunnel vision, regardless of crashes, regardless of inflation, and it worked. Okay, and when you do have that company, because you're going to find it, that's why you're subscribed to this channel already. Am I right? Right. When you have it, you need to hold on to it and buy, because a 10-bagger doesn't become a 10-bagger overnight. You need to hold on to it. When it's up 40%, when it's up 100%, you hold on. And then when it's down, when there's a correction like what we had in March, you need to buy, because that's a discount day. You have such high conviction in it that it's just going to be like going to the market. You're going to be like, oh, you know what? I want a bit of this, and that, because it's going to be here 10 years from now. And, when there's a crash, and a crash will happen, you need to be so damn sure of your companies that you're just going to want to double down and drop and dollar cost average, And so this is really what I had for you today. As retail investors, we should share the knowledge, that would help us make more informed decisions. This is not financial advice, okay? It's purely entertainment purposes. You need to make your own due diligence, because this is your money. So make sure to subscribe. Click on the subscribe button here, and click on the notification bell so that you're notified. I'm gonna post my first stock pick, stock review in the next couple of days. And I'll see you in the next one. Thank you for sticking with me.